Hello guys, here we are in the second part of this course, which is Forex Scalping Technical Analysis. Note, in this part we will see only the important technical analysis, indicators and patterns. Because in technical analysis we have a lot of candlestick patterns. I think there are 43 candlestick patterns and thousands of technical indicators. So we are going to study just what we need to apply this strategy that I will teach you in other chapters. So in first place we are going to see support and resistance. Second chapter we are going to see candlestick patterns and price action. And the third the third chapter, we are going to see technical indicators and moving averages. And the last part, we are going to see how I personally analyze the market for scalping. So let's start. Support and resistance. What is support and resistance? Support and resistance level are horizontal price levels that typically connect price bar high to other price bar highs or lows to lows, forming horizontal level on a price chart. A support or resistance level is formed when a market's price action reverse and change direction, leaving behind a peak or a trough swing point in the market. Support and resistance levels can carve out trading ranges like we see in the chart below, and they also can be seen in trending markets and market retrace and leaves behind swing points. Price will often respect the support and resistance levels. In other words, they tend to contain price movement until, of course, price break through them. In the chart below, we see an example of support and resistance levels containing price within a trading range. A trading range is simply an area of price contained between parallel support and resistance levels. Like we see below, price oscillate between the support and resistance levels in a trading range. Note that in the chart below, price eventually broke up and out of the trading range, moving above the resistance level. Then when it came back down and tested the old resistance level, it then held price and acted as a support. So this is the illustration of support and resistance. The other primary way support and resistance levels are created in a market is from swing point in a trend. As a market trends, it retraces back on the trend, and this retracement leaves a swing point, which an uptrend looks like a peak and a downtrend looks like a trough. In an uptrend, the old peaks will tend to act as a support after price break up past them and then retrace back down to test them. So this is a chart. So as we can see, we have here a support level, this horizontal red line. This is a support and this is a resistance. So as you can see, the market respect this support and resistance level. It's often reacting when market touch these areas. As you can see here, the market broke up the support, and this supported the market up, then retrace, then goes up until reaching this resistance. The market react, the sellers enter here, and the markets drop down until the previous support. Also the market react, goes up to the resistance until it's ranging here, it's ranging between the support and the resistance until here the market breaks up the previous resistance, and this resistance after broken it will become support. This line will support the market to start trending up. We are going to see the same chart here to explain you candlestick patterns and price action patterns with this support and resistance for you guys to better understand the concept of support and resistance, combining with candlestick patterns, combining with price action to understand very well the market, what the market is doing. So in a downtrend, the opposite is true. The ultra will tend to act as a resistance after price breaks down through them and then retrace back up to test them. Here's an example of a market testing previous swing point support in a downtrend. Note that as the market comes back to test the old support, the level then behaves as new resistance and will very often hold price. It's wise to look for an entry point into a trend as it comes back and test this previous swing point. See pin bar sell signal in chart below, because it's at these levels that the trend is most likely to resume, creating a low risk high reward potential. So for position entry, we are going to develop that in another chapter to see how to optimize the entry. So in this example, we are just going to see how support and how the market react to the support and resistance. We have here a downtrend. We have here a swing point become support, then broken down to become resistance. We have here another support become resistance, and like that. This is the way how the market is working. So that's it for today's chapter. So see you soon.